Hello, everyone, and welcome to the FinDev Gateway webinar, Toward the FinDev Gateway webinar, Toward Data Standards for Inclusive FinTech. My name is Abby Augusta. I'm an editor for FinDev Gateway, and I'm pleased to welcome you to this webinar. Our series of FinDev webinars allow financial inclusion practitioners like you to share lessons and attend online presentations and discussions delivered by the world's leading financial inclusion experts. Before we get started, I just wanted to share a couple of notes on logistics. First of all attendees will have their microphones muted automatically. So in order to ask questions during the webinar, please use the chat box, which you should see on the right-hand side of the WebEx window. We invite you to submit your questions at any time during the webinar presentation, and we will address them in the Q&A session at the end. In order to ensure your question is seen by the moderator, select all participants from the drop-down menu when you send in your question. We have over 180 people registered for this webinar, so we may not be able to get to everyone's questions, but we will share the mixed contact information at the end so that you can also follow up with them if your question remains unanswered. Finally, the webinar recording and presentation will be available on the FinDev Gateway website after the webinar is finished, and we will also email the webinar recording to all participants. And now I will hand the presentation over to Chrissy Martin, Fintech Data Solutions Lead at Mix, to introduce today's webinar and our speakers.
Great. Thanks so much for the intro. I'm glad to have everyone joining and to have such a great turnout. Again, I am the Fintech Data Solution Lead at Mix. So we are been in the process for about a year for design a data solution, which you'll hear a lot more about in my presentation. But first, I will take a few minutes just to introduce our speakers. And they will each talk for about 5 to 6 minutes, and then we'll leave plenty of time for Q&A. My first speaker is Gayatri Murthy, who works for CGAP. She's leading research there on how fintech startups can catalyze financial inclusion. Gayatri has been an invaluable member of our working group for the past year or so. And her 2019 report on fintechs and financial inclusion highlights, among other things, the need for better data to bring clarity to the crowded marketplace of fintechs. And so she'll be speaking today as to how data fits into the wider ecosystem, pulling examples and from some of the case studies and pilots that CGAP has been working on in this space. Our second speaker today will be Jeremy Leach from Inclusivity Solutions, which designs, builds, and operates digital insurance solutions for emerging markets with the aim of protecting and enhancing the quality of life of vulnerable people. Inclusivity Solutions was an Inclusive Fintech 50 winner last year, which is a competition run and managed by Mix in partnership with MetLife Foundation to bring visibility to early-stage fintechs. And Jeremy also participated in the benchmarks exercise, so actually did fill out the form and received his customized benchmark report. So he has a unique view as to how each component of this work can support early-stage inclusive fintechs like his. And our third panelist today is Shannon Dwyer from Accion Venture Lab. Accion is again, ABL is again a great partner of ours, both for Inclusive Fintech 50, which they've supported, and also have been valuable members of our working group. Shannon is the Director of Investments with ABL and engages with portfolio companies to identify challenges and barriers to growth, and so really has a great view into the challenges faced by fintechs and was able to provide invaluable feedback to us on the customized benchmark report that Fintechs received. So she'll be speaking today about the value of data at different points in the investment life cycle, as well as to Fintechs in ABL's portfolio. So I wanted to do just a very quick overview of Mix. Mix is the leading global data resource, and we focused on inclusive finance. We are working in a variety of areas to bridge the information gap between socially responsible investors and companies. Doing this through data initiatives that create transparency, and develop strategic insights from complex data sets such as ag finance, fintech, digital, and other different areas that touch finance, all of which hold massive potential to reach the world's 3 million financially underserved. So specifically, when we look at fintech, we see a lack of visibility into this rapidly changing landscape. So Mix has a long history of experience in microfinance, which was, to be frank, at least over time, a bit easier, right? Microfinance, there's one product, and microfinance institutions are all regulated, and you usually have a pretty solid brick and mortar infrastructure within the countries that they work. Whereas with fintech, we see that we're talking about lots of different products, lots of different sizes of companies. Some are digital only, some have agent networks, right? There's a huge variation in business models, revenue models. That's why we're so excited about it, because there's so much innovation. But there's also an inability to compare and benchmark these companies, because we're not always talking about the same data points and we're not always defining them in the same way. It's also hard to see where there are gaps in concentrations and funding flows. So you can see here some of the data that we've pulled from partners and researchers that have been looking at this. But how can we more systematically gain this type of insight into the market and into specific fintechs? To do so, Mix is doing a variety of different initiatives within fintech. So many of you may have heard of the Inclusive Fintech 50 competition, which happened for the first time last year, 2019, and is coming up again, the second round, this May. And this is really created to create visibility into early stage fintechs. Last year, we had over 400 just eligible applicants, even more that took the time to apply. And it was really a global pool that we were able to select the 50 promising fintechs for. Inclusive Fintech 50 also drove a range of insights that we were able to pull together into a white paper, my colleagues were. For example, this one slide that shows that funding is, not surprisingly, highly concentrated by region and within region. So 110 of the 400 applicants were headquartered in Africa. But among those, so that's more than a quarter, but among those, 7% of the fintechs captured 70% of the funding. So this means that investors and funders in following the crowd are missing out on good ideas. And so our hope is that in efforts like Inclusive Fintech 50 and this benchmarks exercise can help create more visibility for high-performing fintechs and more visibility into some of these market gaps. In doing Inclusive Fintech 50, we heard from partners that there's also a need for a dynamic, ongoing data solution. So, Inclusive Fintech 50 really helps to do this visibility and to bring attention to inclusive fintech. But it is a point in time, even as we do it annually. And so how can we have that kind of data accessible all the time and for a really wide range of fintechs and investors, so not just 50 or 400, and not just those that self-identify as inclusive, but still may be helping to close the inclusion gap. So we had 3 key inputs that we developed last year through our market research. So one was the data standards, which we'll talk a little bit more about. Second was, which is a part of the data standards, is inclusivity framework. So how can we really talk about and demonstrate inclusivity? And the third is the benchmark. So using both of those to create this basis for comparison and industry insight. So the data standards are a mix of qualitative and quantitative data points that are designed to surface actual insights. You can see a sample of them here. This is not exhaustive. The exhaustive list is available. We had put it online for public comment last year and are in the midst of updating it based on some of these initiatives that happened last year. The idea here is that by having this information and again standardizing it and defining it in the same way, we can start to say some different things about the industry. We used these data standards to test what types of insights could be generated. What you see here in this slide is just an overview of the 45 fintechs that responded to the benchmarks and therefore were able to be included in the proof of concept. So similar to Inclusive Fintech 50, we had most of the applicants were from Sub-Saharan Africa, or the participants, with some from East Asia and the Pacific, and another chunk from South Asia. Most identifying as B2B2C, which is kind of interesting, and rather than more simply business to business or just business to consumer. And most credit, but as we saw with Inclusive Fintech 50, similar pools of fintechs, that is over time, insurance and savings among the newer fintechs seem to be picking up, which is, I would say, a positive sign. And so part of the motivation for this webinar is that we've just recently published this new report based on this proof of concept. And the idea here is not to say anything conclusive about the industry with a small sample, but to say with this type of standardized data, looking at these different qualitative and quantitative data points, what are the type of insights that we might be able to uncover? And so one example, the report has 11 insights. I'll present probably 2 here today, is that we asked fintechs, what are the end-user requirements? What do people have to have in order to use your system? And interestingly, SMS and USSD seem to kind of rise to the top still, so it doesn't feel like smartphone access is required, at least among these fintechs. But most of them, or many of them, are requiring a national ID. And we know from the World Bank that 1.1 billion people do not have a national ID, and therefore this, has conclusions for both investors and for fintechs, right? So for investors, this limits the fintech's addressable market. They are requiring national ID, but the people in their country many of them don't have a national ID, then you're less likely to gain scale. And for fintechs, this is an area for innovation. How can we tackle this if we really want to gain the scale within the underserved community that we're hoping to reach? Then how are we going to be able to do that? So the second insight is that fintechs have lower acquisition costs when using third parties to manage agents. And so again, not shocking, but I think what's interesting here is that those fintechs that are using agents at all also see higher revenues per customer. And so there does seem to be some trade-offs in terms of cost and revenue for really investing in the type of physical infrastructure that it often takes to reach underserved users. And so, this also has implications for both investors and fintech, that when looking at those cost implications and trying to assess whether or not they will pay off in the long run in terms of increased revenue and face-to-face time with customers. And finally, I'll just briefly show that we did ask some questions on digital data protection, which thankfully, many were able to respond positively to things like they've completed a penetration test against cyber attacks, or they're willing to do that, that they're data sharing partners. And so we're looking to the next round to say, how can we nuance these, based a lot on some of the research that Gayatri has supported at CGAP, and really get at, are we thinking about more advanced types of data protection, such as you being able to port your data to a competitor if you choose to leave the service. So that is all for me. I am going to, one last slide, just how can you help to shape the data solution going forward? We can talk about this again at the end, but use the data standards in your own work. We're looking for people to help us test the data solution prototype. And if you're an investor, consider joining our Inclusive Fintech 50 Investor Circle to get the access to the full list of applicants. And of course, if you're a fintech, look for the application period, which opens in early May. All right, now I will pass it off to Gayatri.
Thank you, Chrissy. And I hope everyone can hear me. I think, Chrissy, your work at the Mix has been incredibly important in terms of adding some knowledge about how the space looks like as a whole, and how our goals around financial inclusion can be better served by fintech or not. So I think similarly at CGAP, we've been thinking about how fintech startups and companies are or can be a catalyst for financial inclusion. And a lot of our work focused on directly interacting with a few of those companies, doing pilots with them. But at some point 2 years ago, we realized that there is actually a gap in the way the development community sees fintech. We often see companies that want to see us, in the sense we see a small part of the fintech world, but perhaps miss out on other stories, and that there were insights and evidence that was missing from our space. So what we decided to do was to kind of look at the space as a whole, and we conducted about 100 interviews with fintech companies, investors, accelerators across 4 markets in the world, so India, Indonesia, Nigeria, and Mexico, but in general tried to get a sense of how is it that this world looks and what parts of it are useful, if at all, for financial inclusion, and what is it that we know and don't know. So I'll just talk for the next few minutes on what is it that prevents us from fully using fintech as a catalyst for financial inclusion, and what evidence do we need to better do that work. So at the very start, all of you who have looked at these companies will know that there is a huge proliferation of fintech companies. Perhaps 10 years ago, when the fintech phenomenon started, there were 4 or 5 big payment companies, but at last count, there are close to 10,000 fintechs that exist in the world, and they exist to provide a very wide range of services. So Chrissy pointed out to this kind of basic division between B2C fintechs that reach the customer directly versus B2B, which is largely defined as fintechs that don't work with businesses, but in fact work with financial institutions and serve a banking kind of service in the value chain in general. And what we kind of started to notice is that, yeah, it's hard to kind of put a picture together of all the various companies. Of course, things were happening around kind of conventional lines like payment, credit, savings, and insurance. And there were fintech products that did each of those services. But increasingly, there were new models also emerging, like marketplaces that didn't really do just one thing, but provide a variety of services to customers on kind of a very user-friendly platform. At the same time, we also noticed that there's a huge range of services that happen that exist in the background. Basically, services that help banks and MFIs or other fintechs be better and kind of provide value in this secondary way. And the huge question about whether any of this actually leads to financial inclusion or not is another lens you could apply and kind of have a basic kind of framework to understand what's happening. However, we also began to realize that as we did more and more interviews, that the real story about how fintech was changing finance is actually within these product groups. So you could say there's fintech there are fintech companies that provide digital credit, but to really understand exactly what's happening, you have to dig. It's very important that you dig one level down, deeper rather, and see who are these credit products for? Are they for individuals? Are they for small businesses, farmers, etc.? And in what way is the business model connected to a financial inclusion problem? For instance, you see a lot of P2P credit companies in India and Indonesia. And what they tend to do is they connect funds with borrowers and essentially reduce the risk to lend to underserved customers. But perhaps they also create systemic risks without credit bureaus. On the other hand, you have a lot of companies that are using smartphone and other data banking transactions to actually create new kinds of credit scores and provide credit or loans to those who normally don't get them. But as some CGAP research has shown, there are several risks that emerge, especially when customers either are unable to pay or face severe kind of challenges in doing so. There's also a question about how, when things become truly digital, do we somehow lose some touch with the customer and create additional risks? A lot of what's happening, therefore, within fintech is important to understand at a granular level. For for the very important reason of seeing whether it's relevant to financial inclusion or not. Another thing that we noticed in some of the interviews and some of the insights we were gathering was that actually no one really sees the full picture of how much funding goes into fintech in a comprehensive way. So there's a lot of data that exists for kind of private and venture capital, but a lot of it combines several countries in slightly kind of problematic ways that are not quite useful for our purposes. For instance, you'll see the chart on the left talks about venture capital all around the world, but it groups under the grouping of Asia would kind of group really disparate markets like China and Indonesia and India together. On the other hand, largely, even if Africa and LAC are sometimes shown, in many ways, when the analysis gets one level deeper, they're largely excluded. So we remain in the dark on what's happening in large parts of the world. Finally, private funding rarely combines with data on public funding coming from funders like governments, foundations, impact investors, and things like that. And there's not an easy way to see a global picture. What this does is it actually prevents us from seeing what funding is happening in the markets we care about towards fintech, but also at what stages. You know, we have these hunches about certain places that most of the funding goes to 3 or 4 top players or the top 10 players, and that early stage fintech suffers. But honestly, there's not a really great way to see that data in reality by any country or region. So that also prevents us from understanding our effects. And finally, even if we understood the business models really well, and even if we understood how they were being funded, another big gap remains, which is that we're not able to understand how capital actually connects to impact. So when fintechs receive funding and are able to grow and stabilize, what kind of impact do they then have on financial inclusion as well as market competition? So if you just think about how fintech companies are arranged in various growth stages, so payment wallets being the biggest guys in town, you know, digital credit being at this kind of growing stage at a growing stage right now. And if you look at kind of early stage companies like InsurTech, savings, etc., on the frontier, then you'll see that companies exist at different stages, but it's unclear whether the funding that is provided to them actually result in, let's say, cost reductions or secondary effects on the poor. So do big payment wallets actually help customers earn better incomes? In the growth of the middle stage with digital credit, we're seeing a lot of companies rise, their copycats and variations come about, but we don't have a great understanding of whether that credit is actually getting cheaper for the end customer, and if so, does it create additional risks while doing so? Finally, at the early stage is where most of the noise is. So there are like thousands of fintechs here that come about and claim to serve customers and underserved customers well. But this is the stage at which a lot of companies are not able to survive or distinguish themselves. So the kind of knowledge we're lacking is what innovations at the early stage can work and scale. So our conclusion is that with better evidence, we'll be better able to direct our efforts with fintech and kind of reduce the hype a bit and focus on what's relevant. So I'll stop there and hand over to Jeremy, who will speak about his particular experience with inclusivity. Thank you.
Great. Well, thank you very much, and nice to connect to everybody today. I hope you can hear me properly now. So first thing to point out is when you look at the kind of the data coming out, Inclusivity Solutions as a kind of an insurtech kind of startup is certainly at the hard edge of the financial inclusion market. I kind of knew that when I started out inclusivity, but I hadn't realized quite how hard it is. So it is not an easy space in the startup kind of world. So firstly, in terms of a bit of background about ourselves, We're an inclusive insurtech. We're focused in emerging markets, as you see on the slide. We've got 3 global partners, 3 global distribution partners, an equity bank in Kenya, Airtel in Rwanda, Orange in Cote d'Ivoire. We have approaching 700,000 policies across those markets, 17 staff, represented by 10 nationalities, which I quite like. Nice to get that mix of diversity within the company and reflecting our name. We concluded a Series A investment last year, and really the focus of now is around business development growth and scale in existing countries and new countries. And a lot of this time will be about fine-tuning our core offering and exploring the new business adjacencies. Again, still, it's, I think in this kind of inclusive insurtech space, certainly proving the business model is still a big part of what we need to do. So if we look at the kind of data requirements in our history, well, there's broadly kind of 4 types. The first one would be around the funding rounds. So to kick off at the beginning and then a Series A last year, it was actually very tough to build the broader story and business case for our partners because there's lack of benchmarking data in terms of the size of the market, the benchmarking in terms of other players in the market, and obviously understanding around profitability. So that's a big issue, and certainly I think this the new kind of surveys are particularly timely. Would actually be nice to have this before our funding rounds, because that would have been valuable for our pitches. So that was certainly one of the key kind of aspects. Secondly, is market data. Well, in the insurance space, actuaries tend to price on data that they have on the available market. That's a real problem because in this market, there's only 2 to kind of 5% of emerging markets. So it's penetration of 2 to 5% of insurance in these markets. So the data you have is basically on the data for existing base, which is again the very top end of the market, or basically headline data from World Health Organization. Really, it's about there's limited reliability of the data in the. So we very much use what Dominic Leiber once called the actuarial thumb-sucking model, the ATS model, where you're really making educated guesses in the market. So there's a real need for market granular data to help inform pricing. The third area of data is around internally generated data to support, the big data focus kind of AI angle. We're ready to support kind of pricing, acquisition, retention, claims, and risk management, and that's pretty key. And again, part of that is the need for benchmark performance data to help understand where we are compared to the market. Again, very limited on the insurance space in our markets, and again, the more insight we can get around that, the better. And lastly, maybe slightly tongue-in-cheek, better understanding of the business development or sales cycle data and understanding how long it takes to secure distribution partners and move forward. A lot of it's anecdotal, but not much evidence in that area. So one kind of question I was also asked is, how can the IF50 and the FinTech benchmarks help in the past and areas for future? Well, again, I think it supports effective benchmarks for the sector. And it is pretty tough because FinTechs, including ourselves, are pretty cagey on data. And certainly on the insurance side, it's even tougher in that area. So whilst there's certainly a need for greater benchmarks, it will require quite a bit of transparency from the sector to saying willingness to share sometimes very sensitive data around how they're performing, etc. But that's going to be so important when we look at understanding the value of insurance in terms of what the claims ratios, what claims repudiation levels are, and how quickly you're addressing claims, and obviously moving towards kind of profitability. And finally, again, this data helps us understand, what are the key issues that are required to be an effective startup in these markets. I mean, we talked a bit about that in the earlier part of the webinar, where again, the use of third-party companies to manage agents, that's really interesting insights because it helps you understand how should you enter a new market if you're going more direct rather than B2B2C, as was highlighted earlier. So it helps us understand, what are the drivers to reaching scale, what are the barriers to financial inclusion, and how do we get in there? So there's a lot of real value from this type of data to help us understand how to operate effectively. Basically, to conclude, I think there's real value in that data. We need to get there a lot further. We need to understand more around the kind of the business case for these models and what are the key impediments to making them work effectively. On that note, I'm going to hand over to the next presenter. Thank you.
Great, thanks, Jeremy. Shannon?
Oh, apologies, I was on mute. Yeah, so I will go ahead and kind of echo a fair amount of what Jeremy said, but take it from a bit of a different perspective from the investor side of things. I guess to start, just want to level set on kind of Accion Venture Lab, who we are and how we invest. So Accion Venture Lab is a seed stage impact investing fund that is part of the broader Accion International umbrella, which works on financial inclusion through a number of different angles. However, Venture Lab is kind of our strategy is to be an impact investor that allows us to be the first institutional capital in the door and be that catalytic capital that gets companies from the seed stage to the Series A stage, where you see more traditional institutions being comfortable investing. In addition to the capital, we try to provide support through governance as well as post-investment consulting to ensure we're distilling the learnings across our portfolio effectively, recognizing that we see similar models in Brazil as we do in India, as we do in Nigeria, and ensuring that our companies are gaining the benefit of being with a bit of a more niche investor, investing in fintech for financial inclusion. And then I guess the last slide on us, to date, we've actually invested in 44 companies. We need to update this map. It's been a busy quarter, globally spanning a number of different business models from SME lenders to neobanks to insurtech companies. And we're excited to continue supporting them and the new companies in the years to come. How we got involved through this kind of data benchmarking exercise, we were in the working group and had the unique opportunity to really shape these data standards as they were being created, given input around metrics to be aggregated, companies to be included, ideal outputs and data cuts. And it was overall just a really great experience and appreciated the intentionality and design that the Mix team was putting into the whole product. From our perspective, we see the value of this data in a number of ways, both for ourselves and then for our portfolio companies. I think for us as investors at a high level, it's a great tool to kind of force us to take a step back and talk about the more macro level findings that Chrissy was mentioning around what are the traits of female founded companies, what are the common requirements and therefore potential barriers for these financial services products, and kind of spur a number of really important conversations that we as an industry should be having and utilizing this data to have. On the more tactical investing side, we're really constantly comparing metrics across companies and geographies at different stages of an investment cycle and to understand how they're performing relative to their peers. So an example of this would be during diligence, if we see a customer acquisition cost well below similar models that we've seen in other geographies or even within that geography, it likely means that the company has figured something out in that acquisition channel, either their messaging, their product design, how they're reaching those customers. And that's something we as a team can get excited by early and then dig in a little bit deeper to understand what are those learnings. And then it's not even just how the company is performing today, but also how can we expect it to perform in 1, 2, or even 3 years. There's always some sort of financial exercise from our perspective of understanding what the company's growth plan will look like. And it's useful to set that kind of plan and pressure test those assumptions based off of trajectories of some of its peers. I think there's also a component of this that helps on the portfolio management and government side of things. So kind of helping our companies post-investment by knowing where the companies we do invest shape up to in regards to other similar models. We can also know where to push and help them in their thinking. For an example that's in the report, if churn rate is way above comps, have we thought about customer feedback loops and engagement sufficiently? How do we really shape out that retention strategy and how do we make sure we're driving those churn rates down? So both as we initially think about an investment and then also how we support it over time. And then finally, I do think, and this is kind of echoing what Jeremy was discussing, this data is helpful to our portfolio companies themselves. It's a tool like this would be useful in being able to get a view into some of those key metrics to help the founders in the C-suite just understand how they're performing and where there are likely areas for improvement. I mean, I think customer acquisition cost is a good one, churn rate, NPS, referral rate, really all of those different variables. It's helpful to contextualize your specific business model. Because currently there are a ton of comps out there for kind of later stage and public companies, but as this fintech, especially in emerging markets, is still a bit of a more nascent industry, making sure we're getting some that are contextualized. And then I guess the last thing I'd say is around startup fundraising, and this is exactly what Jeremy was speaking to, but this report could really help a company shape their fundraising strategy, not just knowing what other companies raise at what stage and from whom, but also where are they spiking, where are they really strong in comparison to competitors, and then how do they make sure they incorporate that into their pitch deck so that they know where their strengths are and they can really take that out and kind of sell it to investors and get us excited during the initial conversation. And so with that, I'll pass it back to Chrissy.
Great, thanks so much to all three of you. That I knew you were going to say still extremely informative. So hopefully everyone else found it useful. I just a reminder to all participants to enter your questions in the chat as they come up. I'm going to start off with one question to all the panelists, anyone that wants to answer. I think one question that we've been spending a lot of time on, both in Inclusive Fintech 50 and in our benchmarks work, is thinking about how to actually define and demonstrate inclusion. You know, what do we mean when we say inclusive fintech? I think we know that there's a lot of implied that there's innovation, that you're focusing on certain markets. We've built out a framework along with Catalyst Fund that really looks at business solutions and how they address market failures. But I'm curious, in your work, how do you define inclusion? I think Shannon alluded to maybe it has something to do with the gender diversity in your management, right? Is it broader than just potential to expand financial inclusion, or is that really what we're talking about when you think of an inclusive fintech?
So this is Gayatri. Maybe I'll try to answer from a perspective that we at CGAP have. So I think a lot of the nature of these fintech startups are that they often start small and grow, and they create, when they're very successful, add greater choice and competition in the market. So before we think about their potential to impact complex problems of financial inclusion, I think we're increasingly feeling that it's important to understand their sustainability and stability as companies. So trying to see whether they have what it takes to slowly grow and scale. And of course, that has a huge connection to whether they have access to the right funding and the right contextual factors, whether it's regulation or infrastructure, to even be stable and sustainable. So I would say that's a huge factor. And you know, thinking about the work we've done in our working group together, Chrissy, I think impact is best measured through metrics that go beyond kind of the basic use and access that we've been using in financial inclusion, to actually think about things like reduction in cost of services, kind of expansion of eligibility of people, and taking greater fold of people into services than previously possible.
Let me jump in here at this point. So thanks for that. And again, addressing the question around defining inclusive fintech and what is your focus. Well, certainly for myself and the kind of some of the founders as well of Inclusivity, we particularly did focus on the insurance side because it was the furthest from the frontier around financial inclusion. I used to be at a think tank, Finmark Trust, and at that time we found that out of all the other products, I mean, there had been a lot of traction around you know, credit and savings kind of transactions, but limited on insurance. And we're not saying the other areas are solved, but insurance seemed to be the hardest kind of area and the furthest from the tipping point. So certainly moving into the insurance space was, and my intention was to try and address a market which was broadly excluded. And certainly that's a key part of why we even call ourselves Inclusivity Solutions, is to try to expand in terms of kind of financial inclusion. And in the markets we're looking at, when you have 2 to 5% of the population currently being served, that's a huge kind of segment that's excluded. But I would say at the same time that we do not tend to use the term microinsurance so much, because in that way that often has a connotation that you're focusing at the very lowest end. And whilst we are you know, certainly not excluding that, we try to look at the market as a whole and say, look at that underserved or unserved market, which again, you know, it could be 95, 98% of the market, and then develop solutions to different segments of that market. So if you look at our current partners, Equity Bank, Airtel, Rwanda, and Orange in Cote d'Ivoire, these are all multi-segment players. And so there's an opportunity to leverage them to address the unserved and underserved market at those different segments, but certainly with a large part of, because the large part of that is the mass market, the low-end market, just by the nature of the markets that we're in. So certainly for us, financial inclusion is about expanding access to insurance across those markets.
That's helpful. This is Shannon now, and I kind of want to just, it seems like from our perspective, we think about it in a mix of the other two. I very much agree with Jeremy in that financial inclusion is first about figuring out what is that first product that this individual can utilize, kind of what is the quote unquote hook product, as we call it, on the investing side. But then to Gayatri's point, how do you make sure it's not just kind of a one-off engagement, but you're really creating a sustainable ecosystem that the customer can continue engaging with? And how do you make sure your products are kind of going with them up the growth curve from just being financially included all the way to being financially healthy? And so what does that look like as an SME lender? Are you lowering rates over time? As an insurance provider, do you sell an initial kind of smaller policy and then you have the ability to cross-sell to something more all-encompassing like health or life insurance? And how do you make sure you're, one, creating that touch point to bring the individual into the system, but then also two, allowing them to grow once they are within it?
Great, thanks everyone. That was a little bit my own personal question because I'm very interested, but you had great answers as if I prompted you beforehand. There's some more questions from the chat on kind of types of funding available and what we know on them. So one of the questions was, is there any work being done that shows where there are opportunities for fintechs to act as blended finance, for example? And another question here about when VCs and kind of Silicon Valley types are investing, at what stage versus more development and impact investors. So I will, kind of answer first that we are working with CGAP to do some of this data analysis, not myself, but Mix is, to analyze some of the funding that's out there to support inclusive fintechs. And so that report and insight will be coming out in a few months. Some of the early findings are that development finance is investing in early stage fintechs, but they are small by comparison to accelerators and VCs, per the comment in the chat. And we also see some private equity, and we also see a lot of funding from founders themselves, especially when we look at our 2019 cohort of Inclusive Fintech 50 Fintechs. But I'm not sure if any of the other panelists want to jump in on answering that question about types of funding and who's investing at which stage.
So somebody else to jump in. I mean, again, from a fintech kind of space, I can give you a bit of a story because we went through quite a process to close our Series A last year. And in terms of our focus, I mean, as you kind of pointed out, we fully believe that for us to be able to do, I guess, the inclusive fintech or financial inclusion at scale, there needs to be you need to be fully incentivized to be sustainable and profitable. Otherwise, you really can't drive to scale. And I think that's been the same lesson from the history of financial inclusion over the last 50 years. In terms of our current investors, we had RGA Ventures, which is a big global reinsurer, as doing a kind of corporate venturing side. And then last year, we were very proud to close with Goodwill Investments and impact investor Alan Gray, through their investment vehicle from Kati Wetu, which is South Africa's biggest private kind of asset manager, and then some kind of angels as well. But to get there was a challenge. You had to basically reaching out to both kind of South African, but also Silicon Valley and kind of European kind of VCs. And it's not easy to reach them. I mean, just interestingly, even though I'd done a study around investors in microinsurance a few years ago at BFA, all the investors who reached out to me wouldn't respond unless I'd actually was introduced to them by somebody they knew well, even though they contacted me. So it was interesting that in the kind of funding side, you had one to be able to access kind of VCs, you had to be introduced by somebody else in that space. Secondly, there was that real issue around the value of debt. A lot of the investors we engaged with would want to do very small ticket sizes, and so we were slightly too large for that. We were looking for around $2 million kind of investment rounds, and the big guys only wanted to go from $5 to $10 million kind of plus. So again, you find that real challenge in that market of some of the kind of impact investors and others being very conservative on very small kind of stakes in real kind of startups, and then the big guys going for the further round, and then they had this kind of missing middle, this valley of death, where it was very difficult to get funding in kind of South Africa. And I think that's something which Silicon Valley in the US seems to be able to get right, but certainly in kind of Africa and South Africa, that's an area that's incredibly tough to address. So it was a very painful year of kind of fundraising, but to say we're very privileged to see you managed to get through it.
Chrissy, I would also like to add, I think Jeremy's experience is very valuable for us as the development community to understand, because actually these are the real issues being faced on the ground. And a lot of our interviews across other markets besides South Africa, where Jeremy operates, show the same thing, that in fact, there's a huge difference between what early stage funding looks like in the US and Europe versus many of the markets that we're interested in focusing on, whether that's India, South Africa, Kenya, Nigeria, Indonesia, etc., that it is quite difficult for companies who are either early stage or coming out with complex products that are beyond payments and credit. So when it comes to the real valuable products like insurance and savings that add, real tangible, could make a tangible difference to low-income people's lives, these products are actually very difficult to get going. And it's as an industry, we need to understand that fintech is not like the MFI world, where you had one business model, one way to fund it, and everything got going and the industry organized itself. That in fact, we're talking about 20 kinds of business models operating at various stages and trying to create value in a way that probably has not been created before. So some of it doesn't deserve our attention because it's hype, but it's important for us to get clearer and clearer as a community on what deserves attention and where development finance should go, where private finance doesn't. And perhaps development finance needs to understand that maybe we are the people who take a little more risk, because some of the rewards could truly be beneficial for us and in solving problems in financial inclusion that haven't been solved yet. But good data will help us do all of that better. And so to that extent, I think it's important for us to understand what gaps of knowledge exist. So I think, Jeremy, thanks for sharing your experience. I think that's what we also heard a lot about in the interviews we did.
Yeah, and this is Shannon. Would love to jump in from the investor's perspective. I kind of agree with everything that was said. A little history in Accion Venture Lab is we were actually spun up about 7 years ago now to play and hopefully fill as much as we can the seed stage gap, because we found a lot of other investors and more traditional financial institutions were exactly willing to go in at the Series A, Series B when the company had solid traction, had already proven that product market fit, but recognize in order to see the innovation that is truly going to kind of touch all of the aspects of the market that we're excited to see, you need those players to go early. So we try to be a true seed investor in that we've invested pre-launch, we've invested with just a handful of customers and fill that gap as much as possible in order to then say, if we are willing to kind of take the risk, not even just with our initial capital check, but also with these post-investment support that we provide, particularly in kind of our portfolio engagement function, which is basically an in-house consultancy team that goes on the ground post-investment and just works with our companies on whatever the most strategic priorities are. Can we de-risk the situation enough to attract more and more individuals? And I think, unfortunately, today there is still a large gap. It's filling in some markets that have a more developed ecosystem, but it's still very much there in others, especially some of the kind of more nascent markets or nascent startup ecosystems, I should say. But we do see a trend of more and more people kind of being willing, our co-investors and peer investors coming earlier and earlier, but agree it's a slower process. And especially from a risk perspective. When you look at the US, they have incubators, they have accelerators, they don't even just have the funding, but all of these other resources available to startups that we really need to start building and getting into these newer markets to help investors kind of get comfortable with the risk and or figure out how to adjust their strategy accordingly. So agree, it's still a large gap. We're doing our best to fill it, but are excited to see more and more people kind of coming into that space.
Great, thanks everyone. So we are probably on our last question, maybe a second one if any of the participants want to chime in. But I would love to. I mean, I think you have probably already answered this question, but we've said a lot. So it would be great to just hear as we close. What is kind of the most important challenge that you think that better data within the industry, so at this industry level, can really help to address? Of all the things that we've addressed, what would be the main priority that you would want Mix and other participants working in the ecosystem on this call to take away?
This is Gayatri. I'll take a crack first, but I think it's important to understand how new the fintech space still is and how quickly it's become hyped to the place it is, and therefore it's important for us to treat it cautiously but also systematically. So I think the way forward that could be useful is for us to understand the business models, for us to understand the flow of capital and its gaps, and then finally, but most importantly, for us to understand what are the effects of these models and the funding going into them on the lives of the people who are underserved or low income or traditionally left out because they are not considered eligible. So I think in the end, we have to bring it back to that. The data needs to come out of the silos of various firms and investment portfolio that it exists in, but that's a huge challenge. So I see what lies in front of us, and for you guys at the Mix, it's not an easy task, but I think we need to understand the models, the funding gaps, and eventually stories or data around the actual effects happening on the ground, especially for some of the scaling models which have been around for 5 to 10 years. But yeah, thanks.
Yeah, I think for me, it's probably reiterating some of the what I kind of said earlier. I mean, the type of information we want, because again, what do our when I'm particularly thinking in terms of the investors coming in, what do they want to see? They want to see, one is what is the size of the market? On the one hand, what is and how is it growing, both in terms of I guess the growth in terms of market as a whole, in terms of those who are moving, say, for the more into the middle income spectrum from a client perspective, but also in terms of the growth, in terms of number of people being covered by insurance, to see that it's a market that's worthwhile investing in. Also understanding who are the players in the market, or at least again comparative players to ourselves, and what is the competition doing? How is it performing? And I like what you did earlier in terms of the type of models that you showed, B2B, B2B2C, kind of etc. And I think it's also understanding which models work, what are the constraints, and what are the barriers to they kind of to take up. So again, I think the information that's coming out is going to be pretty helpful kind of going forward. As I think what also kind of mentioned for us as well, which I don't think is really an issue that Mix can help, is around better market data on the ground around health issues or to inform pricing, because it's still very much as I said, the ATS actual thumb sucking model in many cases. Although I think we're getting pretty good at thumb sucking.
Yeah, I think I would echo both of those points. This is Shannon again. From an investments perspective, I do see a ton of value in just the ability for different types of investors or newer investors entering this space, is being able to better conceptualize what these models even look like. At the end of the day, a lot of investors are financially minded individuals, so as many numbers as we can put around around churn, around customer lifetime value, or around customer acquisition costs, I do believe we can kind of lower the barrier to entry and just get them more comfortable with the risk that is going to be needed and involved to see these really strong startups take off and kind of fill this funding gap and even just this broader support gap that they're facing today. So hopefully just contextualizing and allowing them to better understand what's really happening on the ground, and then hopefully willing to take that leap, write that check, and kind of support the system more broadly.
Great. Thanks so much, everyone. I think that gets us really at just about at time. I really appreciate the panelists for taking the time and offering such great insights. And to my fellow mixers who are supporting me in the background. So thank you for that as well. Abby, did you have any final logistics notes you wanted to close with?
Yes, thank you, Chrissy. Thank you very much, Chrissy, Gayatri, Jeremy, and Shannon, for such an engaging and forward-thinking discussion. Now we'd like to hear from all of the webinar participants to get your feedback. If you can please take a brief moment to respond to the poll questions, which should appear in your WebEx window on the right-hand side. And before we go, I just wanted to go over what's next. As I mentioned in the beginning, the recording from this webinar and the presentations will be available on the FinDev Gateway website within the next day or two. We will send a follow-up email with the recording to all of those who registered for the webinar. And you can please feel free to share this with your network. We also invite you to learn more about Mix's Inclusive FinTech Data Initiative at the website on your screen. And if you have a question that we didn't have time to answer during today's webinar, feel free to follow up. You can contact Mix at the email on your screen, fintech@themix.org. And of course, for more financial inclusion resources, please visit findevgateway.org. Once again, a big thank you to the presenters and to all of you who joined the webinar today for your questions and engagement on the topic. Thank you, and have a good day or evening wherever you are. Thanks.
Thank you.